Welcome to PhillipCapital Weekly Market Watch. My name is Alice, Great China Specialist from Phillip Securities Global Markets. Since many U.S. tech companies released their earnings performance last week, we will have a brief overview of recent U.S. market and talk about the Berkshire Headwinds annual shareholders meeting held last Saturday. 211,000 jobs were added in April, slightly more than expected, after a sluggish March for hiring and weak overall economic activity at the start of the year. The jobless rate edged down to a fresh 10-year low of 4.4%. The report suggests that economic growth will rebound in this spring. That should also keep the Federal Reserve on track. Policymakers are expected to raise rates 2 more times in this year and have hinted and take steps to pair the central bank's massive balance sheet. The Nasdaq rose nearly 1% for the week, while the Dow Jones Industry Average and the Standard & Poor's 500 index advanced modestly. Despite some big headwinds, Apple, a Dow component, along with Facebook and especially Tesla, pulled back following quarterly reports. And General Motors and other automakers reported decline in U.S. sales yet again. Fiber optic stocks warned of sluggish China demand, but cited blooming growth in the U.S. Consumer electronic giant Apple earned $2.1 a share, up 11% year-over-year, on revenue of $52.9 billion, up 5% in the March fiscal second quarter. It sold 50.67 million iPhones last quarter, below expectations. The CEO Tim Cook blamed the slowdown in iPhone sales on consumers delaying purchases because of the speculation about the next generation device, the rumored iPhone 8. But Apple hiked its dividend and added $50 billion to its stock buyback program. After edging lower on Wednesday and Thursday, Apple stock rallied to a fresh record on Friday. Facebook revenue rose 49% to $8 billion, beating the consensus estimate. Monthly and daily active user growth also exceeded expectations. Facebook once again cautioned that ads revenue growth will slow down meaningfully. Its shares edged lower on Thursday and Friday. Tesla showed a larger loss than expected, but strong revenue growth with its first quarter earnings. Tesla revenue rose 6% to $2.7 billion, beating the Wall Street estimate of $2.6 billion. Yet the luxury electric car maker reported an adjusted loss of $1.33 a share. CEO Elon Musk said Model 3 plans are on track and said that the robot software could one day make Tesla as valuable as Apple. Tesla share tumbled on Thursday, extending losses ahead of the company's quarter 1 results, but rebounded on Friday. The so-called Woodstock of capitalism was held in Omaha last Saturday. Tens of thousands of people gathered to hear Warren Buffett impart his wisdom and answer questions at Berkshire Hathaway annual shareholders meeting. Let's have a brief overview of the hot topics in the meeting and find out about the opinions from the greatest investors for the markets and stocks. One journalist asked about the struggles at some of the Berkshire's large stock holdings. For example, the United Airlines faced criticism about it treated as a customer. Do its investment on these companies still stand? All business have problems, Mr. Buffett says, but those are business he likes very much because he thought they had very strong hands. And when asked about the violent Chinese stocks, investing legend Warren Buffett said that markets sometimes resemble a casino. For markets, they are still in its early development stages like China. There are probably some tendencies for them to be more speculative than markets that have been around for a couple of 100 years. We know the Shanghai Composite plunged more than 40% in the summer of 2015 after rampant speculation came to a sharp end. And in the last several weeks, Chinese authorities have tightened regulation on financial markets, keeping stocks under pressure. The Shanghai Composite is now on the flat of the year. In addition, Vice Chairman Charlie Munger said he thinks the Chinese stocks market is cheaper than the American market, and he believes that China has a bright future. The next question on technology was widely expected. Berkshire has long avoided tech stocks because Mr. Warren Buffett and Munger said they didn't understand them. But Berkshire bought IBM in 2011 and Apple in last year. Since Berkshire recently changed its views on IBM and sold 1/3 of its stake, how does Berkshire feel about tech and its Apple investment? Mr. Buffett admitted his mistakes on IBM and thought IBM and Apple are very different companies. Apple is more of a consumer products company in his opinion. Both of them lament about the missed opportunities for Google and Amazon, companies which they admire greatly but didn't invest in. And Mr. Munger also noted that Berkshire made mistakes in its Walmart investment, most of which has been sold by the end of the last year. And here we have listed the top 10 publicly traded U.S. stocks ranked by holding value in Berkshire Hathaway portfolio on one slide for your reference. According to a regulation filing published on February 14 this year. And with this, we have come to the end of this week's Market Watch. For more information on global equities, you may approach any representatives from global markets. Please subscribe to us on PhillipCapital YouTube channel and Facebook for more Market Watch videos. Thank you.